Why would we raise money from you?
I want to start.
Please, no. Please come here so we can see. It's a proper 2-minute speech.
Like a regular reverse pitching, right?
Yes.
So if you are a B2C startup, your service contains social interactions, and your user base is growing with good retention, then RubyLight is the best investor for you. So why? Because we were in the same shoes before we created RubyLight. Our background is social networking business, and we've created and helped to build several significant social networks in Eastern Europe and Russia. We know what problems startups are facing during the growth stage, and we know that technical problems are the most challenging ones. So we learned how to survive hockey stick growth, and now we're helping our portfolio companies to enjoy this hockey stick growth without any technical hassle. So how do we do that? We base our involvement on 3 things. Investment. We always put money into company. Technology. We make available access to software modules, which are very practical, functional solutions. Third, experience. Over 70% of our team are tech specialists with extensive knowledge in high-load systems. We fill any gaps in technical team of any startup, and we help to remove technical bottlenecks and solve scalability issues. And I must add that not only we scale, but we also help to save costs on operational expenses. Just a few hours ago, my colleague Andre, who's in audience, provided a few examples during his presentation how we've managed to help to save over €500,000 per year for our startups. So if you feel that we are kind of fit, it's easy to find us, www.rubylight.com. Thank you.
Thank you. So that was RubyLight. Now, Marvin from 500 Startups, stage yours. 2 minutes.
Great. Hi, everyone. So, why would you take money from us, and why would you come join the 500 Startups program? I think number one, we help your company grow in general. That's probably the biggest part. So we've invested in 12 full-time, part-time online marketing and B2B sales experts to basically help our companies grow. That's one thing. We have another 12 people on staff that are all EIR. So everybody on my team has actually done startups before, which is actually not common in most accelerator programs. And the third part is, I think, our Silicon Valley ties. Most of us come from the Silicon Valley world. I've been in Silicon Valley now for 17 years, and we've done this for a long, long time. We've done 19 programs now, and the reality is that it takes most accelerated programs 3 or 4 programs before they even know what the hell they're doing. So the reality is that most programs are actually just not very, very good. We've been around long enough, and I think our success speaks for itself. So I'm done. Thank you.
Thank you. That was 1 minute. Kristjan?
Yeah. So I'm Kristjan Laanemaa from Karma.VC. Karma.VC is a Series A stage investment fund, and we invest in early stage companies in all over Europe. So we saw an opportunity in Series A investments because there are relatively many seed investment opportunities all over Europe. Companies like RubyLight investing here in Latvia, Imprimatur, Flycap investing in Latvia, angel investors everywhere. But the next stage is a bit less covered by investors. So we wanted to take that position and invest into the companies that have gotten some seeding from someone else, and then we can add this type of €1 to €3 million Series A investment. So who are we, and why we would be a good investor for your startup? So the team is rather small. We have 4 people, 3 partners, and we hired also an associate. And me and one of my partners, Margus Uudam, we actually managed the investment portfolio for Skype's founding engineers for the past 8 years. And this was a really great experience for us. We invested into 30 companies all across the world and ended up having 12 successful exits out of them. So we have sold companies to Facebook, to Xilinx, to Elsevier, And taken these kind of seed and Series A stage companies from really beginning, from just a small team to kind of really great exits. So I guess that track record is something that can prove that we can do valuable stuff for companies. So thanks.
Hi guys, I'm Steve from Seed Camp. So yeah, the accelerator market, it's actually quite competitive. You know, we up here are competing for your attention perhaps as much as you think you might be for us. I'd like to impress upon you why the best startups actually come to Seed Camp. In the earlier part of my career, I actually ran new ventures at Idea Lab, which was the original internet incubator started by Bill Gross. And the problem with incubators is that they were accused of keeping entrepreneurs alive that otherwise would have died in the wild. So along came the accelerator, and the accelerator basically took startups and it pumped your head full of information over the course of 3 months and then pushed you out into the wild to see if you could survive. It turns out now that there are actually an awful lot of accelerators around, and I'd like to convince you that what you really need is a first round founders fund, which is actually what Seed Camp is. What we do is really quite distinctive, and the reason why I'm here is this. We don't just fill your head with knowledge over the course of 3 months, but we provide you with 3 things. We provide you with smart capital, and like a lot of these other people here, there's 12 EIRs like myself at Seed Camp that have all started and built businesses, and we work with you to help you scale. So the capital is smart itself, but the principal thing that you get with Seed Camp is you get access to a lifelong learning platform. You know, it's not just that onboarding week that we give you 4 times a year when you start off, but it's all the programs that we run on a monthly basis. Twice a year we have something called Investor Day, where you get to, whenever you're ready and you're ready to raise capital, we have a network of the 200 leading VCs and angel investors that turn up twice a year ready to listen to you pitch when you're ready for money. Not only that, but you will also then participate. The first thing, smart capital. Second thing, lifelong learning platform. But the third and final thing is the network. There are 230 companies that Seed Camp has invested in over the last 7 or 8 years. Think of that network around the world, all of those founders and all of the contacts they've got, all of the people they know. Literally over Slack, you get to access that network if you come to Seed Camp. So I could kind of bang on at you for a long period of time about the credentials of the leading Sandhill Road VCs that co-invest with us, the Kleiner Perkins, the Greycrofts of the world. I could talk to you about the companies that we've invested in, like TransferWise, and recent acquisitions like Stupeflix was sold to GoPro, Brainiant's just been sold.
Thank you. Time's up.
And that's my 2 minutes, but I won't.
Carman?
Hi, this is Carman from Click Ventures. Why you need to take money from me first? Because I am an entrepreneur myself. So when I was 11 years old, I successfully convinced my father to let me renovate my house alone. And also I'm a dropout. So I got an offer from Imperial College for a PhD and sponsored by a company, and I give it up to start my own companies. And I have started 3 companies in 20 years, and I was also a tech columnist. So 3 years ago, I started angel investment, and last year I found Click Ventures. So Click Ventures, we position ourselves as global connector because we understand the pain point of entrepreneurs. When they want to explain globally, they didn't have the right connections. So we focus to collect the global connections that's useful for our portfolio companies, and we help to shape their global expansion strategy and connect the right connection in the right time. And so what kind of connection we have? For example, like Harvard University, they contact us. They want to connect their MBA student to work for our portfolio companies around the world. And we also have service providers like PwC, KPMG, and governments resources. For example, our portfolio companies in Hong Kong and Asia, they have hard time hiring tech talents. So we help them to expand to Taiwan and some other countries to hire tech talents. And we also help our portfolio companies who are raising a new round to connect them to local investors of the countries that they are planning to expand to. So that's all. Thank you very much.
Thank you. Rockstart.
Good evening, guys. So my name is Rune. I'm one of the co-founders and the CEO of Rockstart. And at Rockstart, we're all about supporting startups in the first 1,000 days of existence. And we decided to take this focus and dedicate our companies to these first 1,000 days because we know and we learn how critical it is to get it right. Not to scale prematurely, not to hire the wrong people as the first employees, not to get the wrong investor on board, not to sign the wrong deal with a big corporate. And for that reason, we want to be that additional co-founder, the knowledgeable co-founder that done it before, next to your side, the friendly investor who can help you in these first 1,000 days of existence. So we really like globally focused, scalable technology startups, and we have some experience with marketplaces, software as a service, enterprise software, and peer-to-peer models. But we also like startups working with data, specifically around machine learning and AI. And for that reason, we are launching a very specific program just for AI startups here in the beginning of the next year. And that's actually our 5th program. Before that, we launched 4, and I want to talk about 3 other programs specifically. So these 3 programs are attacking 3 big societal themes: health, energy, and food. And if we learn something throughout the entire day, we have some big challenges coming up. There's going to be 10 billion people in 2050. And the only way we can accommodate these challenges with 10 million people is using technology. And we want to do our utmost to help and support that. And there's a problem in these 3 industries, in health, energy, and food. It's often heavily regulated, and there's a lot of big companies having way too much control. So what we're trying to do is we're trying to bring together corporates, government, universities, investors, and give startups working in these 3 different themes a better chance of succeeding. Then a little bit of track record: 100 startups we invested in. They raised around 44 million, created 550 jobs. We're starting our next program in March and opening application 1st of December here on Thursday. I'm here with my colleague Adriana sitting over here. We'd love to talk to you after this. Thanks a lot.
Thank you. Mark?
Hello, everybody. I'm Mark White from White, Summers Cafe, and James, and I'm the only person up here that doesn't have a fund, and I don't have money. But the reason you want to talk to me is to access money with a funding in Europe or in the United States. You've got to talk to someone like myself or any other law firm around. And the issues you've got to be concerned about is sort of not the first funding that you do, but the second and third, and maybe the exit. Fundings with European companies by European investors, sometimes those fundings take place with a US company parent, and so you've got to restructure the company. Or if it's a US set of investors, a syndicate in the US, you've got to reform the company, typically in the US right now. It's very few US funds that invest directly into European funds. So you've got to talk to somebody like myself. You've got to be concerned about the taxes on yourself, about transfer pricing between the company here in Europe and in the United States, and control issues. So why talk to our firm? We're the startup lawyers behind Tesla Motors, behind Prezi in Hungary. We've worked with Podio, with Unki in the United States. We were the lawyers that actually worked with Hotmail back in the mid-1990s. Our firm's been around for 20 years, 20 people. We have offices in Silicon Valley, San Francisco, Portland, Oregon, New York, Budapest, and Warsaw. So we're in the region. We've been doing deals here forever. We work with Tier 1 venture funds in Europe and the United States, and we know how to do this type of work. Thank you.
Thank you. So as we saw, 2 minutes is quite a long time. Those of startups, may I ask you, what did you remember of all the pitches here? And don't be shy. I mean, like, most of the time you'll be on the stage and you'll be asked questions. Just like, can you give some feedback? Like, what of that capture your attention? Tell me.
Just one thing, only Marvin actually said, like, I understand, like, one sentence that I understood was that you should apply to part-time startup because they've done it before. And everyone else, I didn't understand anything.
Thank you, Boris. So summarizing, okay, probably won't. Well, all right. So let me ask you this question. So this has been quite like a discussion from both some policymakers from tech community. But I'm going to ask this question to all of you. Can you in one sentence define what is a startup? I'll start with Mark in this the discussion.
A startup is a new venture. It could be started by first-time entrepreneurs or serial entrepreneurs, but it's a raw startup with a new idea, new markets, and with a product or service that has yet to be developed.
Okay.
Good question. Group of people coming together to disrupt something existing and create a new paradigm.
All right. Disruption. How would you define a startup?
So a group of people could be just start from one people want to do something, and it could be anything.
Painting.
Have to say a small group of slightly crazy people who want to change the world with a big idea.
Okay.
I think it's a team that has some kind of hypothesis about some business and then goes on to test it and create it into a real business.
It's an idea in search of a business model.
Okay.
Driven people that trying to solve some problem.
Okay. Okay. So tell me. Okay. So if, for instance, we raise. So let me do this question. So I'm just going to ask you questions, and then whoever wants to pick that question, maybe that's more like sparks and a discussion. And you guys, if you feel like you want to add some questions, especially you, Boris, I guess, just feel free to ask as well. So let's say if you're doing a startup now and you're looking for the first, after friends, fools, family, your own savings, selling your house and dog money, would you choose Accelerator as a place to go for doing that, or would you choose angel investors? What would be your advice before? Like, would you choose Accelerator as the first place to go? Would you see that as like a good start, or not really?
I think it depends. So I think it depends on the business that you're in. And I think a lot of it is just sort of how you look at Accelerator, sort of how you look at a student looking at like the next step of business school, right? What's my biggest problem? What's my biggest interest? And can this thing, whether it's business school or whether it's, in this situation, angel investor or an accelerator, are they really good at, have they shown that they can do this thing before and can really help me? And help me sort of like, so for example, we're known for, I think we're fairly well known for sort of like customer acquisition. Mm-hmm. And so if you have a customer acquisition problem, we're probably the best program for you. But if you have a product issue or whatever, to be honest, it's probably YC. Like, they're really good. They have strong technical people that I think that's sort of the expertise of your tech stars. I think they're very, very founder driven, just in general, of just making you a better founder. So I think it really depends on what exactly the thing is, assuming you know what your problem is, right?
Okay. So Steve, what are not accelerator kind of startups?
Not accelerator kind of startups. Well, I actually think that the best funding source to answer your question, the best funding source to go to is your customers. Yep. And B2B companies are often in the best position to do that because they're going to sell 100 grand, first engagement. So keep the company yourself. Don't come to an angel or don't come to us. Go to a customer first.
Okay.
If for various reasons you can't do that, and sometimes the marketing budget with a B2C program requires that, then an angel is the right place to go to if that person singly brings that market to you. If it's an angel who comes from your customer base, an angel that comes from your marketplace, they might even be better because they can kind of more directly tap it. It's a case of getting the investor who is close enough to the benefit of what you are going to build.
Thanks.
An accelerator is like a gateway drug.
So I just want to keep like all the questions like very short because we're like 7 people here on stage. I don't want you guys to be super bored with us. So let's keep us like very, very short. Our goal here on stage, all of us here are here because we want to help you to succeed in whatever you're doing. And you're like nobody's doing accelerators and investment funds just because we like doing that. We only can do that if we have successful entrepreneurs. So we're here on stage to get you guys and girls more successful. So if anything we talk here is something you can intervene and say, okay, we want to do it better or something, just throw the questions at us. Do we have those throwable mics, by the way? Yeah, so the two guys with the mics. So if anybody has a question, just raise your hand and mic's gonna fly your direction. You can ask the question. So Aija and Carman ask you, and actually you, Kristjan as well. So would you see, just one sentence, would you see if a company has been to a very good accelerator, is that a validation for you to invest in them, or doesn't really matter at all?
Well, for us, we always look at statistics, basically, user statistics. That's all we need.
So you don't care if the company's been an accelerator or not, you only care about...
Statistics would show, because we're quite narrowly focused, so...
Karma Ventures?
The fact whether the company has been in an accelerator doesn't matter. Matters what the company has achieved in the accelerator. And some accelerators then have better track record of achieving things than others. So results is the main thing that we look at.
Carman, what do you think?
So for me, I look at the traction of the company more important than anything else. But what I've observed is if a company is from an accelerator, their legal document tends to be more tidy.
All right, so accelerators help with documentation from venture capital perspective more than like a seal of approval. That's a good point. About you. So if I'm doing a startup, what you're saying to me is first 1,000 days matters, but also you're about to move the companies to Amsterdam for a while, right? So it's one of the places in Europe that's certainly like a hub for technology, but why would I, so if I'm in a Latvian company or Estonian company and I want to sell to US market, should I consider going to Amsterdam for a while? Should I consider even like staying there? Like why would a smaller ecosystem compared to Silicon Valley, everybody else, why would that be important?
Yeah, I mean, that's also why we are in the States, right? I do believe if you're already in a market, you already have traction. Let's say you have a market here and you're thinking about moving to the US, I would maybe also question that, right? If that really the market that you're going for. But I think at the phase that we sort of supporting companies, the idea is of course to move the entire team and work with them very closely in the appropriate market that they're going for. And even if you sit in the Netherlands and you know, getting better at the basics and getting closer to your proposition, I think that's very doable. We've seen that quite often.
Okay, Carman, yeah.
I have an interesting view on kind of why to stay here, not go to the US. I was talking to one entrepreneur from Poland that was developing really interesting technology in language or kind of artificial intelligence area. And he said that the main reason why he wants to stay in Poland with his company is because when he goes to US with his engineers, large tech companies will steal them in a minute. So keeping them here is a really good thing because they cannot go to these large tech companies. Sorry?
A lot of confidence in your engineers.
So, Carman, about Hong Kong, you come from Hong Kong here. So, does being in Hong Kong helps anyhow as an entrepreneur? Like, I'm here in Latvia, I want to build a company, and maybe being in a bigger city is easier for me to hire someone or legislation or something. Does being in Hong Kong helps?
So I think we have portfolio companies across 10 different countries. So I found that every country's got their own advantage and problem. So in Hong Kong, we have a lot of business people, manager level people with international exposure. So it's very helpful for when they need to expand globally. So a lot of our portfolio in Hong Kong, they can expand into a few different cities within the first year. But in Hong Kong, it's very difficult to hire tech talent. So that's one of the reasons we are helping our portfolio company to expand to other cities just for the tech talents.
Okay, so Mark, so when a startup has been to accelerator, when the startup has raised the first round, and then they go on and raise like more serious money, they probably at some point knock on your doors. and then you've probably seen cap tables of all kinds, you've probably seen structures of all kinds. Like, what's the worst you've seen in terms of early stage, pre-early stage companies and investors and accelerators have done to the business? What's the biggest thing you have to like work on and to clean it up, or what's the biggest mistakes you can do in like in the first under 1 year?
The biggest mistake that I think companies make when they first structure is they sell common stock to investors, and so the common stock price goes up. That raises the price then for subsequent employees, and it's hard to hire the team. Or the stock price jumps all over with different employees joining at different points in time. Or, rather, the company hasn't documented anything. It's made verbal promises to contractors, to employees, and this all has to be documented. Different pricing, different points in time. It has to be structured and it has to be sequential.
Mm-hmm. So you also have experience in flipping European companies to United States. So let's say there's a company in the Baltics. There's a company in the Baltics, and we want to be here, and we just want to stay here. Would there be any reasons why a company should seriously consider to have a subsidiary or like a mother company in US or somewhere else? Or do you think it's just completely fine also to live as a Baltic company? When does that matter to be incorporated anywhere else?
Probably 2 points. Virtually every European company that I work with remains as a European company even when they flip over. So the ratio is probably, I would say, 90% of all employees, typically the technical talent, the administrative talent, the customer support people remain in Europe because you don't have this issue of the team working for another company. You've got cost advantages over here, and you've got business development, marketing, and salespeople, and maybe product design engineers or engineers that interface with customers to sort of adapt customers to the use of products in the United States. You've got a very slim team in the US, you've got the bulk of the people that remain in Europe. In terms of whether you have a US parent or a offshore parent, it's really driven by the investors and what they require when they make their investment. But if that's not an issue, something you've got to think about is if and when you do flip in the future, you've got to get not only price shares in the US company first before that happens. You can do it through a subsidiary or a...
So generally, flipping earlier is cheaper than later?
It is.
Okay.
It is.
So we have a question from the audience.
Hi, my name's Ernest. I'm the founder of Adurio, startup here in Riga. Now, each of you investing have your own process of finding the right startups for you. What I'd be interested in hearing is what's the one thing that others in this room probably don't get about finding the right startups, and what makes you the best at finding the winners of the future? Thank you.
What's the question? Summarize the question?
Yeah, can you please summarize the question? Like, we all had a little difficulties to hear that.
Okay, so what is the one thing about the way you find startups that other investors won't probably have, and what makes you best at finding the winning startups?
So you want to disclose, you want us to disclose our business secrets now?
Yes, please.
Go first.
So I can start. So what we focus on mostly are companies that are developing new technologies that give them competitive advantages. So we are not that good in maybe discovering early stage new web applications or something like that. But if it's like heavy and deep technology, then we have excellent experience and also excellent advisor base who can actually take the product and take the technology apart, and then we can make a decision whether this one is kind of multiple times better than anything else in the market. Typically, startups tell us that they you are the first guys who actually understand to the very detail about the tech. So the kind of hard tech is something for us.
All right. Anyone else? But please, one sentence.
Yeah, I don't think there's no secret. It's just a lot of hard work. We basically get a lot of referrals from our network. We've invested in over 1,600 companies, 600 through the accelerator program. So we get a lot of referrals from like friends of like our founders. we get a lot of referrals from our investor base, and we travel to conferences and speak at a lot of events and actually just go to a lot of startup competitions. So we're just very active.
All right.
Well, surprisingly, I also had feedback from fellow investors, and conferences does work, actually. The networking works pretty well.
Conferences work?
Yeah.
Okay, so I would summarize like due diligence for you, volume for you, and then networking?
Networking.
Okay, anyone else to add?
So for me, it would be the traction.
Traction?
And whether the company is accumulating some asset in terms of data or some channels.
Okay, numbers then? Seed camp.
I think there are a lot of hygiene factors. You've got to have a great disruptive idea. You've got to have an MVP. You've made some progress. But I think at the end of the day, it all comes down to people. And what we do as investors, we compare your team with 200 other teams that we've seen. So don't be afraid to go and find the best possible co-founders you can. Look at yourself very critically and say, what do I bring that's really unique and where am I weak? And I was talking to another company earlier that needs, they're doing something in one area and they need someone from the crowdfunding industry. Go and find the best crowdfunding person you can, persuade them to join you, because at the end of the day, a truly extraordinary team will win.
This is treatable. Don't be afraid to find the best possible co-founder you can.
Yeah, we kind of on the same, right? We're early stage, so at the moment we look at startups, there's rarely that much traction, and traction can actually sometimes derive away from looking very closely at the team and looking at the dynamic in the team. So for us, it's about meeting as many founders as possible. We run our own events in 20 different cities across the world, right, for that reason.
So White Summers is a fairly small law firm comparably to the big corporates. Why you guys then? Why not to go to like the big names?
A couple of things. We are very close to our companies. As a smaller team, we have to understand the issues of our companies. We act as advisors and sit on the board of many of our companies. We have a price advantage as well because we're not a large global firm. We're probably 1/3 less in pricing. More importantly, we've got to pay attention to our companies, and we've got to be aware of what they're doing every step of the way.
All right. So let's talk about fucked up cap tables. So who have you seen a fucked up cap table? I've seen a dozen. So when does it happen? Like you like the team, you like everything, like all the numbers are right, all the networking parts are right, everything's good. But like, let's say the company's raised seed round, they raised 3 seed rounds in total of 85,000 euros, and the founders own only 40% of the company. So what do you do in that case? The company's amazing, traction's amazing, team's amazing, they're growing like crazy, amazing opportunity. What do you do? I'll leave you last here. Maybe, yeah, whoever wants to start.
Maybe I start first. I have an experience. There's a team I like very much, but they kind of, in the very beginning, they give away 25% of their share to a advisor. Mm-hmm. And so I help them to set up a founder vesting plan so that they can renegotiate with their advisor for the growth potential of the company in the future. And also, I help them to set up the option plan so that the founders and the management team can earn back most of the shares in the future and bring them back to a more reasonable level. Yeah.
All right. Anyone else on that you wanted to ask?
Yeah.
I think that giving back to founders is the main thing.
Okay. Okay. But you had this experience, right?
Yes. So
okay.
You just invest in the company only if.
Right, but how easy that to manage? Like, let's say, so usually like where I've seen like, the more exotic the tech ecosystem is in the particular country. If you go to like very well established tech ecosystems, that would be very unlikely because like that thing won't fly in very established ecosystem. The more likely it would fly in upcoming markets. So also those investors, like how easy is it to negotiate that?
It's really hard.
It's really hard.
The reality is that most of the time I'll walk away. because it's just a pain in the ass. I've had to do it way too many times. It sucked up 2-3 months of my time negotiating with investors and helping them clean it up. And so the reality is that it's not worth the time and energy and effort. That's us.
I think that's right. It's all about alignment. If those early investors that came in and took a big share of the company, if they go, you know what, we actually need professional investors now, we need to recapitalize this thing and make it work, then great. If they see that immediately, but if they're going to fight over it, you're on a hiding to nothing.
What could be like, if you can summarize, like what could be like one thing you can say to such a case, to those investors to change their mind? Is there any kind of formula you've seen also, Mark, maybe?
Do you want your investment to be worth something in 5 years?
Yeah, it's the numbers. Like, do you want like 1% of something worth a lot, or do you want like 50% of something that's going to be worth nothing?
Yep.
And also, what teaches them is that most VCs will tell them the same thing. So if they are smart and get 4 times the same answer from next round VCs, then they have to act, or the company is staying small.
I think there's 3 possibilities. One is that you recapitalize. A second is if the company can't be funded and the existing investors will not change their opinion and the company's about to dissolve, you restructure and set up a new corporation, sell the IP to the new corporation, you have a clean slate going forward. We've done a lot of deals like that recently. With more mature companies, typically you put in place a cash bonus pool. So that's really equivalent to an equity interest. And typically that is either pari passu with the preferred liquidity preference, or it comes on top. So it's a incentive for the existing team to see downside protection on a low price deal where they wouldn't otherwise get a return because the preferences are too high.
All right. So risky regions, like I've anecdotal case I recently had, not recently, but in the last like a year, I had a conversation with a venture fund who described the location of my company, which is Fragmentic, which is based in Silicon Valley, as we're not really sure, like there's too much uncertainty about the location. So apparently even Silicon Valley may raise some eyebrows for some investors. So what would you say is no-go region for you? For like why? Just like in a one sentence is like, okay, so it's like, is there anything, if you see a great company, like really amazing opportunity, but you would never go there just because of the region? Let's start with you.
Well, we don't have any regional restrictions, that's for sure.
No, at all?
Yeah,
okay.
Not at all. But if we see some risks, we'll prefer some restructuring later on after we invest.
Yeah, I'd say the only country that we can invest in is actually Iran. We're really interested in Iran, but just because of the US-Iranian relations, it's illegal for us to actually invest there.
That's probably North Korea as well, then.
Oh yeah, North Korea too, and Syria probably, so those 3 countries.
So for us, actually we have invested in more than 35 companies, and the only one company died, which is in Turkey. So we found that even though we want to invest in different companies from different countries, but there's some company that got political unstable situation on and off, and these are some countries that we want to stay away from.
Okay. Anyone else to add? Okay. Quick question: single founders, yes or no?
Yes. Yeah, it's okay.
Yes. Okay. Mark's.
The danger with single founders is that they take too much of the equity, and so it's hard to build a team. And so the mindset has to be different. You've got to be very inclusive of sharing the ownership in the company.
Like single founder and huge S-up, or something like that?
Pretty much, yes.
Okay. Anyone else?
It's okay.
Yeah,
I mean, that's a risk, but I think it's okay. Frankly speaking, we prefer multiple founders, 2, maybe 3 founders. It's just really hard. So it's better to sort of distribute the work. So we do prefer balanced teams.
Probably more to the accelerators. What's the biggest number of founders you've seen that actually worked?
It's 3.
3. Yeah?
Yeah, that's probably right.
Okay. Okay.
Yeah.
Okay.
That's a question.
Yeah. By the way, be loud. If I don't pay attention to you, just be loud. Just shout, like throw some heavy objects towards us or whatever. Just grab our attention. We get 5 minutes to go, so?
I have a question. How do you measure your success? Also, in the last 3 years, I don't know how many of your companies have been in existence for how long, but in the last 3 years, do you feel that there is an acceleration of their success in the ventures that you are funding, or not really? So just a kind of idea.
Success in acceleration in success?
No. How do you are investing, you are helping the companies to develop, etc. So the first question is, how do you internally measure the success in the ventures?
How do you measure success?
This is not very difficult. The KPIs, the return, what is your internal goals? And the second is, in the last 3 years, has it been improving? You feel that there is an improvement, or it is a stagnation?
All right, so are the startups improving over the last 3 years?
The one that you're investing, yeah.
The one,
And
okay, is
how
your
do you
portfolio
measure
doing
the
better?
success?
Okay, so the first question I think we already covered in terms of like what metrics you look at and what are
No,
the key.
I think what we consider KPIs and metrics, right? So I could start. NPS scores of our founders, like, would they recommend the program? Number 2, how many of our companies actually get funded? How much money they actually raise? The quality of the investors, I actually think is probably the best and biggest signal. So that's what we look at.
Mm-hmm. So is the portfolio doing better? How do you feel about your portfolio? You should probably be very positive about it, right? Anybody's like to add something about generally, is there a trend the last 3 years been better than 3 years before last 3 years? Is it? Okay.
I think there's becoming more serious founders again. I think there was a period we went through at least where we saw like up to like 600-700 applications for like these 10 spots, and
all right.
Yeah, maybe only 10% was actually really good quality. I think we're getting less applicants, but more serious founders.
Mm-hmm.
More.
Okay, so we have time for probably the last question. I just want to summarize with a quick question about Europe versus United States, the ecosystem-wise. In terms of the quality, in terms of the opportunity you see in Europe, the companies coming out of Europe versus companies that are established in United States by people actually living in the United States, not the Europeans moving to US just to do the company right away, but actually companies coming out of Silicon Valley, companies coming out of anywhere else in the States versus companies coming out of Europe. How do you see that like recently over the last maybe 2-3 years? What's the trend? How do you see these two ecosystems? Let's start with Mark probably.
I see more mature companies coming out of Europe by the time they reach the United States. Companies that have built something, they've got early revenue, the team is gelled, and so there's something to look at.
Rob?
Yeah, so more mature, good question. No, let me hang on this one. Just gonna think about it. It's like that.
So I think whether the company is from Europe or US doesn't matter, because I found that nowadays all the startups expand very quickly. So within the first 1 or 2 years, they are already expanding to at least 2 to 3 cities in different countries. So ultimately, they are everywhere.
Okay.
Yeah.
Thank you.
I got it. All right. So I think that the big difference between Europe and the US is the market size, right? So if you're born in the US, you already have 350 million potential consumers. And I think that's changing quite rapidly. So you see startups now from Europe, even for small countries, getting a much more global mindset early on. And I think that's the difference, and where we become more mature.
Steve, any experiences with
I think,
US?
The US ecosystem in the Bay Area is extraordinary. It is the most extraordinary place in the world. And if you're a founder, you need to go over there and feel it and taste it. It's incredible. Now, having said that, I think there is a steady, progressive rise that's happening here in Europe. Speaking with a little bit of a London angle on it, what's happening around Silicon Roundabout is really very credible for the first time to international investors. What's happening here in Eastern Europe, we see just extraordinary things, incredibly talented people. And because things are so competitive in the Bay Area, that's why some of our friends are coming over here. They're looking for better opportunities because it's competitive. Capital is competitive, and the very best deals, if you don't have a Sandhill Road address, you really struggle to get access to that. So, we have to look for new markets.
Kristjan, look from the far north Estonia.
Sorry?
Looking from the far north of Europe, from Estonia.
I mean, what we see, at least the kind of US teams that end up asking money from European investors is they are oftentimes very much commercially focused and going straight for the business. In Europe, we're seeing much more kind of product and tech orientation from the founders. So that's maybe one difference.
So US are more sales, and Europe is more product. Okay.
But it of course depends on you cannot draw a line and say that it's like that. It always depends.
I'm actually super bullish on the European sort of overall ecosystem in general. I think the quality level of the founders has gone up a lot over the last 2 or 3 years. So I think like the best founders across whether it's London, Berlin, Sweden is actually just as good as a founder in the US. The problem is that, for example, to find these really, really good founders in the US, I'd have to go through 10 companies, I'll find one good founder. I have to go through 20, 30 companies and 20, 30 teams to find somebody equivalent. And so the ratio is just much larger, but they exist, and that's why we come here, why we spend a lot of time in the region. So it's there.
Aija?
Well, I like the idea. I used to have one conversation with another investor in the region, and I like the idea that he told that, speaking about Baltics, we are so small that if we look at the success stories, those are B2C startups, because we don't have this opportunity to kind of develop B2B startups. We need to have this infrastructure and networking in place. So all the success stories are in B2C. So we as B2C investor hoping for new startups in this area.
All right, thank you. This is where we also have to stop because the time's up. It was a great pleasure to have you all here. I hope it was insightful for you, and we're all here around. So if you have a startup, and if you have like a startup idea, or you have like some kind of investment concepts in your mind, these people are still around, and it's your responsibility to grab them and use the chance. That's why we do this conference. That's why we bring people here, for you to give the chance to meet them, to grab the coffee, grab a beer, whatever it takes, and to build connections. So really resonate like what you say, is like building network is the most important thing you can do as an entrepreneur, and probably the most important thing you can do as an investor. So let's do the networking. There's a next session starting right now, so we'll give the stage now to the next topics. Thank you.